maybe if you just listen between the lines, there is some serious work being done, and maybe we could have some sort of conclusion to this Iran conflict by tomorrow. In the meantime, my first guest says that things may actually get worse, although she is confident ultimately that things will be better. Sort of like the storm before the calm. All right, folks, joining me now, BNY Wealth Head of Investment Strategy and Equities, Alicia Levine. All right, Alicia, let's talk about this because we don't know, right? President Trump talked about that 8 o'clock deadline. Of course, what can happen between 8 and midnight tomorrow. We know we've got the firepower, but still, you're saying even if it's extended, which it could be, you say it's stormy now. It's the exact opposite, the calm before the storm. This is the storm before the calm.
Right, because it just feels that the market was already weakening going into the Iran conflict. And I'd say it's remarkable the S&P is only down about under 4% year to date. But with the rise in oil prices globally and in the U.S., that's going to take some time to get through the market. There'll be some input costs that are higher for earnings. So we want to keep an eye on that. Now, if the war ends tomorrow on the U.S. terms, then it's off to the races. But it's unlikely to happen. That's a very small probability.
Are you, though, excited? I mean, for me, last week I thought was phenomenal. Tuesday, Wednesday, Thursday, the markets could have been down any day. In fact, they were down a lot Thursday. The S&P crawled back. It wasn't that it was up for the week as much as that if the first time we saw crude went from under 100 to 112, and we still finished the week higher. It feels like there's sort of a shift, if you will, to fundamentals a little bit, and maybe thinking that this will be eventually resolved.
So look, at BNY Wealth, what we do, we always talk about the fundamentals because the headlines have really been, since COVID, very volatile. And in the end, you want to see where earnings are. Where's the real economy? Because that gives you where earnings, and actually earnings have moved higher since the beginning of the year. 3% higher expected for the S&P. Now we're at 15% earnings growth this year. It's helping to keep the market higher. That's what we're looking at, and we don't see a recession this year.
So I want to use this table because these are some of your historic oil shocks, and for the most part, you know, most of them have resulted in recessions. Some have not, but they all have impacted the S&P. And to your point, this is like the mildest impact so far. But how long does this, like, if it lasts another month, another 2 months, when do we turn that upside down?
So I think the U.S. can withstand this a lot longer than the rest of the world, particularly Europe. So I think, you know, economists right now are marking down growth for Europe and earnings as well. The U.S. can handle actually probably another month or two of this. It's not going to be great at the pump, but we also have the one big beautiful bill and the fiscal support coming in exactly at the same time. So that's going to keep the economy going. You have a lot of fiscal support this year. There's no recession coming. Just you have volatility. It's very typical in a midterm election year to have this. So until we break through that 200-day moving average at 66.50, it's a technical market. The 50-day over 6,700, you can backtrack a little bit.
So, and again, a midterm election, we know that they typically dip, but after that we have a huge rebound, so nonlinear year. Let's talk about sectors then.
Okay.
Especially, I know that you really, here's again, the midterms. So we're at maximum drawdown, but the 1 year forward is huge.
Spectacular.
Spectacular.
So people get really nervous. Sometimes they come out of the market because they think there's too much noise, and that's the biggest mistake you can ever make, pulling yourself out of the market. Sometimes you just have to ride the vol.
Sectors, industrials, energy, large financials, technology. Really, though, you're really pounding the table, seems to me, on industrials.
So we think we are in an industrial boom here in America. It's really happened over the last couple of years. We've got ISM manufacturing positive and growth for the first time in 3 years. We had
3 months in a row. It's not a fluke.
It's not a fluke. We definitely had an industrial recession, and we're coming out of it. And you can see the industrials have held up here, still positive year to date. So we like this.
Beautiful chart bouncing off that 200-day moving average. It looks like it's going to go back to an uptrend.
And if you're stock picking, this is what you want to see. You want to see the test and then the bounce off the moving average.
Great stuff, Alicia. Thank you so much.
Great to see you.
Always appreciate you. All right.